Hey, Bulls and Bears, I'm back again. You're watching Bull, Boom, Bear, Bust. My name is JJ, and I've got a piece of information, some data here, a piece of information data. Got some news. How's that? That we are seeing a major shift in consumers' ability to make purchases. And maybe part of it's that just they can't do it. The other part of it, maybe they're afraid to do it because they see their savings rate is plunged. We're talking about the everyday average U.S. consumer, the citizen, which is the driver of the economy. About 70% of GDP is based on consumer spending. That's why I think we're going to continue to see bad GDP prints going forward. Of course, they're going to deny that it's a recession, and they'll keep the lineup that the strongest economy ever. The economy strong as HELL. I don't want to curse. My channel's already in trouble. I don't want to get in trouble for cursing. All right, so let's take a look at this. Ocean shipping costs decline 84%. Listen to some of these numbers, and this shows you that consumers are buying less. Yes, a lot of the retailers are overstocked. That's part of it. They ordered too much during the pandemic. But at one point, we had 100+ ships off the coast of California. It was actually up to almost 120 at one point. This was late 21, early this year, 2022. Now we're down to just 4 ships. So from 120 ships down to 4 ships. I'm going to bring up the chart right here. The period between Labor Day and Christmas is typically the peak shipping season. Not this year, folks. Just 4 ships off the coast, down from 120 ships. So yes, the supply chains have opened up. There's more people working now. There's not the huge labor shortage and the infection crisis that we all know about. Now it's just lack of consumer demand. Key stats here. The Port of Long Beach says shipping lines have canceled between 26 and 31% of their sailings across the Pacific Ocean over the coming weeks. And that's according to Sea Intelligence. In September of 2021, the average cost for shipping a container from Asia to the U.S. West Coast was $20,000 plus. Last week, the average cost to ship a container from Asia to U.S. was down 84%. That's down to about $2,700. Wow, folks. That just tells you in a snapshot the severe position that the U.S. consumers are in. This is a huge drop, and it's a combination of the cost of living, wages aren't high enough, and the debt levels are just beyond what most people can handle. And this was put out here by Craig Fuller. The real reason that supply chain constraints are easing is because fewer goods are moving through the supply chain. The last time this Port of LA, handled so few loaded import containers was during September of the financial crisis. So here's another data point, and we talked about dozens of different things over the past year or two that point to the sad state of the economy. Here's another number that takes us back to the financial crisis. All right, now here's my thoughts on this. I think I'm going to wait to make any major purchases until at least the beginning of next year, the beginning of 2023. I think a lot of retailers are going to attempt to unload all of this excess inventory during the holiday season. And we see that they're not ordering as much as they have been for 10 plus years now. We've told you the stories. We showed you the information about the oversupply of goods. In fact, some retailers even stopped accepting returned goods because their warehouses were so full, and they just were giving out refunds for lower priced items instead of taking the items back. So the warehouses are overflowing. They have too much inventory, and consumers are slowing down in their spending. That's just going to escalate the issue. So I would say we're probably going to see some really good deals this holiday season, but even better after the holiday season, once retailers realize that the holiday shoppers didn't clear out a lot of their inventory. That's what I think about it. Please let me know what you think down in comments. All right, now with that said, let's talk about what's happening with credit card debt and consumers. And I had to turn my lights on, by the way. That's why I paused it. This is an article out of Reuters. Amex swipes down as loan loss provisions eclipse upbeat profit view. All right, so to sum this article up, Amex is out there saying that things are not looking so good for the U.S. consumer. And in fact, credit card interest rates have just hit a 30-year high. So think about this. Think about the big picture here. Consumers in record levels of debt, not everybody, but about 7 out of 10 people, 70% of people currently are in the most debt they've ever been in when you combine all the different types of debt: housing, credit cards, store lines of credit, anything you can think of that you borrow money on, buy now, pay later apps. All this debt is at record level. 70% of people in record levels of debt. 30-year high interest rates on top of that. Where's this going to go? And the Fed's not done raising rates yet. How is this going to end? How's this going to end well? How does this end with this soft landing that some people on the media have been predicting? So even if you see a big segment of the population in bankruptcy, it's still going to be called a soft landing because they're going to be looking at Wall Street. They're going to be looking at corporate profits, okay? And even if profits drop, it's still not the end of the world because the upper level executives, upper management, they have the golden parachute. Now, let me bring up this chart here to my right. Sorry, I may have to cover up the pumpkin, like my pumpkin. I may have to cover up the pumpkin for a bit here with this chart. Out of Reuters here, this is a quote too. There is a perceived fear around credit quality moving forward, said Thomas Hayes, chairman and managing member of the investment firm Great Hill Capital. Although big U.S. banks maintain that customers' financial health has remained strong, we just heard from, was it Wells Fargo last week and Bank of America last week? The consumer's strong because they're swiping their credit cards. Remember that? Higher rates, however, benefited lenders as average annual interest rates on credit cards leapt to a 30-year high this month, according to bankrate.com data. Amex's third quarter net income rose 3% to $1.88 billion. $2.47 a share, beating street estimates of $2.41 a share. There you go. Pretty scary looking chart there, huh? And it's not done increasing. All right, it continues. Overall credit member spending grew 21%. Put that in layman's terms. Credit member spending means more of their customers are going deeper in debt, and by a lot. 21% they grew, helped by an upswing in millennial and Gen Z customers. So millennials and Gen Z, according to Amex here, are the ones taking on the most debt with a big uptick, the biggest uptick in debt level. Now, to me, what's pretty interesting is trying to dissect this narrative that's being put out there. Here's Janet Yellen. Warns of dangerous and volatile environment as she pledges to bolster Treasury market. So she's out there saying the following. Take a listen to this. Kind of, to me, it sounds like double speak. We've experienced energy shocks, food shocks, supply shocks, persistent inflation in many countries around the world, rising interest rates in many parts of the world, and we have seen some financial market volatility and rising liquidity and credit concerns. You bet, yeah, rising rates will do that, especially with these levels of debt. But here's what she says. This was Janet Yellen, who warned Monday the current economic backdrop is dangerous and volatile, while stressing that the U.S. economy is, are you ready for this, healthy, and the financial system resilient. Now, what she means by the economy being healthy is the corporations, corporate America, Wall Street. Wall Street is healthy, and consumers are getting in record levels of debt. You see, that's good for Wall Street. You going into debt is considered great. It's a great economy. So you see two sides of the coin here, right? This is what it is. One more piece of data here. Mortgage rates hit a 20-year high. We are higher now than we were at any point during the financial crisis. This is higher than when the housing bubble went bust. What's it going to lead to? Please let me know down in comments. The decline in home sales continues to worsen, continues to accelerate, and existing home sales fell for the 8th straight month, according to the NAR, that's the National Association of Realtors. It fell another 1.5% to a seasonally adjusted annual rate of 4.71 million in September. The last time they fell to this level was May 2020, in the onset of the health crisis. Also, home sales are down 25% year over year as of last month, and that's according to Redfin data. So keep stacking, folks. I know I say that. I had one commenter say, I can't keep stacking. I'm making $26,000 a year. I'm barely scraping by. There's not much you can do in that case. What do you say to someone that's making $26,000 a year? I hope you don't have too many mouths to feed. I don't know what I would do. I'm in California. I couldn't. 26,000 a year in California is basically homeless. Unless you're on some sort of assistance program. I would probably look to move to a lower price state. Depending on where you live. Maybe you're already in a lower price state and you're still barely scraping by. That's a tough one there. But you're not alone. A lot of people are in the same boat. Now, this person that was in comments on this channel, and you may be listening right now. I don't want to say your name, but I know you said you were struggling. You're making 26,000 a year, and you work in retail. And you said it seemed like that everyone coming into your store seems like they're doing great. Everyone has tons of money. Well, think about this: when you're shopping at other stores, and maybe you're swiping your credit card, maybe it's your debit card, maybe you're paying cash, whatever. The person at those stores watching you shop, they probably look at you and think, oh, you're doing well. You're in there buying this stuff. Of course, it's probably going to look okay when people are buying stuff, but how much debt are they in? The data shows that most people are in a lot of debt, the most debt they've ever been in, roughly 7 out of 10, and going deeper in debt every month. This does not end well, folks. I just hope we can make it through this without too much carnage, and we'll see how bad it's going to get. But hope you guys like this report. Hope you like the data and research that we always bring you. Thank you very much, everybody. Big love. Bye for now.